This video features AI-generated avatars for GMX News. Good morning. I'm Catherine Montgomery in New York. Here's your GMX Markets recap. U.S. stocks ended the week lower as tech finally hit the brakes. The S&P 500 fell by just over 1.6%. The Nasdaq dropped by 3%, and the Dow slipped by 1.2%. The big story? Mega-cap tech reversal. Nvidia down 7%. Tesla 6%, Meta 4%, and semis, software, and media all followed. Here's a look at the week's biggest misses. e.l.f. Beauty was hardest hit, down 38% after earnings missed. But the equal weight S&P held up, showing the first real improvement in market breadth in weeks. Sector performance split sharply. Energy, healthcare, real estate, and staples led. Technology, discretionary, and communication services lagged hard. On the macro side, the week was loaded. AI spending scrutiny intensified, consumer weakness showed up in earnings calls, and shutdown politics added noise without resolution. Earnings remained strong. Over 80% of companies beat, but the market punished any miss aggressively. For the European close, let's go to Sophie Smith, reporting from London. Sophie?
Thank you, Catherine. European markets mirrored the US downturn. The Stoxx 600 slipped 1.2%, the DAX dropped nearly 1.7%, and France's CAC 40 fell 2% amid China-related softness. Mining and luxury names led the declines, while renewables were a standout. Vestas surged after a strong earnings beat. Currencies also shifted. The dollar weakened for the first time in a month. The yen strengthened amid risk-off flows, and the euro gained modestly as ECB policy expectations stabilized. Commodities were mixed. Gold held near $4,000, oil extended its slide, and natural gas saw weather-driven gains. For the Asian markets, we go to GMX reporter Yuki Nakamura in Tokyo.
Thank you, Sophie. Asia traded cautiously heading into the weekend. Investors focused on US tech volatility and mixed signals from China's stimulus efforts. Japan held relatively firm, with defensive sectors offsetting weakness in exporters as the yen strengthened. China and Hong Kong equities remained under pressure, driven by fading stimulus momentum and continued softness in property-related sectors. Across the region, traders are looking ahead to the US CPI report on November 12th, which could set the tone for global risk appetite next week. Back to you, Catherine.
Thanks, Yuki. And that's your GMX Global Weekend Recap. For full analysis, charts, and sector breakdowns, read today's GlobalMarketsX report on Substack. Thanks for watching.